Good morning, guys. Can everyone hear me okay? Is the audio good? Okay, great. I'll have the video up in just 1 second, guys. We'll get started in just 1 minute. Okay, and is everyone looking? Are you looking at the domes, or do we see the charts in front of y'all? Okay, great. So let's go ahead and get started in that case. So we're having a gap this morning, and so the first thing I want to bring up on the gap ups we had an overnight high right into Friday's high, and let me get my drawing tool. I apologize, I don't have that out quite yet, but I will get that started. There we go. Okay. Okay, so we are gapping, or at least Globex overnight high was right here. We're currently trading at 1841, which actually puts us right in the white zone. And I may adjust the white zone at the open, but I haven't thought that through yet. I'm gonna have to go back through. I kind of located it here overnight, and obviously we traded through it and up to Globex highs, so I may adjust it up to where the Globex highs are. I'm not certain yet. So the first thing that I want to point out this morning is two areas that were kind of in between, if I can pull it down enough. Okay, so this area right here, this 1855 up to 1860, that's 50 to 62% retrace from the highs. This area right here, this basically it's 1802 down to 1794, is the 50 to 62% retrace from the very lows back when this started on the day that we had the Fed meeting in November, I think it was, when this rally started. So I think ultimately it'd be really nice if we could have a test down here, but I'm not certain that we can get it. I can tell you when we get into this area that I will be obviously a responsible buyer. We're a long way from that this morning. I don't think we'll be getting there today, but I said that last week and we had some pretty good sized down days. The other thing I want to point out is that morning gaps all week last week have been sold. That is a change in character. Even what appeared to be, at least early on, a pseudo open drive higher. If I were you, I would make note of the fact of where the open drive started from and how it differentiated from the open drives that we've been dealing with over the past 3 and 4 months, which is this. Those open drives usually came from opening near or at the Globex highs, or from gap downs with extreme tick readings. What that open drive was simply a short squeeze out of the gate. And they're very, obviously, it's a very different response versus when you have new money flowing into the market and we open drive higher, and then we end up with the open drives had been looking like this, right? Where we kind of go up and then we balance like this, and we weren't getting very much rollover. Obviously, Friday and other days we've either been gapping and then getting responsive sellers, or in Friday's case, we had a short squeeze, open drive higher, and then we reversed and came down the lows of the day. We obviously balanced, so we really never broke this balance. But that is a change in character. And so the people that's hurting in terms of traders are the ones who were buying were chasing the open drive, right? And they were just getting in as soon as they possibly could, or they were buying simply the open tick, and the rollovers are just killing those guys. And that's where traders get into trouble, where they've gotten into a rhythm where for weeks and weeks or months and months, a particular pattern's been paying over and over again, and they've become actually somewhat addicted to it, and they can't stop taking that trade, and they keep getting buried on it. So heads up there, that's a little bit changing character. It doesn't mean that we'll roll over off the open or that I'm shorting the open. It just means that I'm aware that the pattern has changed. Going into today, what I would look for today. Now, normally what we end up with, we've had a huge range overnight, right? If you look, okay, this is Globex lows down at 1823.50, and we've traded all the way up to Friday's highs at 1846. That is over a 20-point move from top to bottom. I would actually argue that the overnight range has been stolen. Excuse me. Give me just 1 second. Okay, I apologize. If anyone's obviously if you can hear me, you're not having problems, but the desktop version works a lot better than the Internet Explorer version in terms of audio. So hopefully that'll help JP there. So at any rate, the point is the whole overnight range is stolen. Usually when we get an overnight range stolen, we end up with balance through the course of the day. So that balance could look anything like, when I envision what the balance could look like, we could have this. We could end up with something like this, right? We come in, we open, we reject out of Globex highs, we come back into a test for the white zone, and then we rotate higher, right? They attempt for a break, and then we can simply fall back into the range, right? And that range could even take us all the way down here. We don't know what that's going to look like because balance can actually end up looking like this, right? And that's still, and then we close like right here. That's still a balanced day, just a balanced day with a downside bias. Or you can have the opposite of that, right, where it kind of goes like this and then falls back in. Either way, what you end up with is a profile that looks kind of like a pyramid at the end of the day, the volume profile, where the majority of the volume takes place in the middle. The middle on these days is the worst place to place a trade, particularly by 10 a.m., 10:30. You can kind of figure out where the most volume is taking place, and that's where you want to stay out of. And the edges become the easiest places to launch trades from for a move back into the middle, right? And then you might want to leave trailers for the opposite end of the range. But the middle should be your primary target on those if we end up with a balanced day. And I think if I was going to give odds, that would be where I would give odds to, is that we're going to end up with a balanced day. So a couple of things that we need to look for right out of the gate. What causes traders the most damage early in the day, right? First of all, we are looking for open drive higher. 1, 2, 3 bars up, right? Just like what Friday morning looks like. This is very indicative, right? These 3 bars of an open drive higher, except this particular morning, right? We'd like to see that. We'd like to see it clear Globex highs, right? And if we do get an open drive higher, what I'll really be looking for in terms of short will be at least a 10-point extension up off of an open drive, right? Which would actually put this as my first trade location. If we open at where we're trading right now, 1842, I take 10 actually, it would actually put me either the back of this zone or the front of this zone. Okay, so now for in terms of the easiest areas to short. If I'm an aggressive trader, right, just like on Friday, I'll take Globex highs, or the other choices, right? We don't open drive higher. Excuse me, let me take one step back. The other version of open drive higher is just simply one very large bar and one very large bar, and then and no retrace on that large bar, or very little retrace. And also in both of these scenarios, the low on the first 5 minute bar will be the low for the day. That would be how you interpret an open drive higher with an open drive higher, accompanied also by a very strong tick in the terms of an up day, and the retraces on the NYSE tick basically stop at 0 for the first hour. So all of them tend to remain positive the first hour. Those are all things that are indicative of an open drive higher with a potential trend day up or a range extension to the upside, right? In addition, the other thing that we'll be looking for in open drive higher, right? We'll have half gap. If we opened at 1842, the close was 1832. So if you split that in half, that brings up 1837 would be half gap. This would be the full gap. And so inability to attain either one of these would be a sign again of an open drive higher. If we open like this and we don't even bother coming back down to test half gap, that's another sign of strength. Now I got to tell you, I think enough damage was done to the downside that we're not going to go and trade straight back up all the way back to the upside. That's just a gut feeling. Okay, I don't trade off the gut feeling, but I'm actually not all that concerned with an open drive higher. Of course, I'll let the market dictate whether that's a correct gut feeling or not. I'm going to trade off of what the zones provide me. So let's go through another scenario of where I would take Friday's high. If we open 1842, right, and then we do come back for half gap, and then we take off, and we have a nice fat rotation into the back of this zone, where I get at least 6 points into the back, or I guess in this case 6 points into the front, I would be willing to take the trade here. But that's the scenario in which I'd have to get at least a 6 point rotation in order to automatically take this trade. Otherwise, I'll be trading off of otherwise I will be trading simply off of the dome if I take a trade here, and I won't be calling it if it's anything less than 6 points in this zone. I will take a short somewhere in here, and I will take a short here and here. Now this area is important. If you recall the last couple of times, and I don't have examples of them, but I had them up on the charts, when NQ and ES both last time had reached 50 to 62% retraces, those were areas where you would be able to launch successfully trades to the downside, swing trades to the downside, and I pointed them out. Now, in both occasions, I believe, we actually traded slightly behind that 50 to 62% retrace, and then we rolled to the downside. So, again, I'm not trying to guess. I don't go up and say, well, this is where I'm going to launch my swing trade and damn everything. I don't care about the stops. I know I'm probably right. I don't do it that way. Let's say I take a trade from here. I'm still going to take my scales at 2 points. I might scale less, but I'm going to take my scales at 2 points. And then what I'm going to do is I'm going to either decide if I have a lot of conviction to the downside, I'm going to leave my stop on balance at net break even, which will put me somewhere back here. And if I don't have a lot of conviction, I may simply move it to actual break even and just see if the trade works. Same thing in this area, right? I'll launch it from here. I won't be taking a trade in here, simply trying to guess whether or not we're going to roll to the downside. I always use the zones to launch off. And for people that are new in the room, if there is anyone new, I want to be very clear. My most basic trade plan, and the only trade plan that you need in terms of building your account equity, first time into the zone, right? First time into the zone, I expect a pause and a 2 point rotation lower. I'm looking for 1 to 2 trades a day on my most basic strategy, right? And that's what I need to build my trading account. If I can achieve a 70% plus win rate, which almost everyone I've coached has been able to, even in difficult periods of time where we've been trending straight up, we've been able to maintain either this or better, depending on which month we're looking at. And the reason that's important, you can get 1 to 2 trades a day, and you can maintain a string. You'll have to, I won't go into what that string is, but every so many trades, you add a contract. You don't always have to double, but if you're only trading one contract, you have to double, obviously. But you don't want to necessarily be doubling, but adding a contract as you move through. And instead of trying to increase the number of trades that you're catching per day, simply focus on increasing your trade size and capturing those highest odds trades each time. In addition, on the upside move, let's look at one more thing. trade time from basically from 9:30 a.m. until 11 a.m. Central Time. Those are the highest odds for reversal. We've been reversing a little bit earlier here lately, but I'm going to stick with the 9:30 to 11. That works probably in 80% of the markets, and so I'll stick with that time frame. So what are the patterns that we're looking for today that I believe will be in effect? Normally we look for on a downside move, we'll get this 9:30 to 11 spot, and we kind of come back up in a U or a weird looking S, one of the two, and then midday we can either continue up, trade sideways, or come back down to the lows of the day at the end of the day. On down days, I want to remind you, even in except for the most bearish of markets, the majority of time, and even in bearish markets, we do not close on the low. It's a rarity to close on the low. Even on a down day, you're looking at closing at the bottom third of the range to bottom half. We're obviously still in a bull market. Net, we haven't even retraced 50% of this move from the breakout in November. Okay, so the buyers overall, even though some damage has occurred at this point, buyers overall are still in control, and I would therefore on down days expect this. However, what I think is going to change and what I'm looking for is on days where we go up like this, in that same period of time, we're going to get retraces back to the middle, and then it'll be determined whether we go back and retest the top, stay at the middle, or close down to the lower third. But I do expect the inverse of this to start kicking in for a while, which would be great. I could be totally wrong. How will I know if I'm wrong? There'll be very few good rotations back to the downside, right? Our moves up will go up, and we'll kind of do one of these little basing things, and then we'll go up to the next zone, and we'll repeat that pattern, right? No matter how far we stretch, we've all seen this in the last couple months. We just kind of hang up at the zones and keep going higher. And then the other way that I'll be looking at in terms of strength, again, I think we'll be more balanced going forward, is that the downside rotations, will be equal to the upside rotations, just like we had on Friday. We had 10 down, and then we had 10 up. So if I stop getting that pattern, particularly early in the day, I'll have a good heads up that, hey, maybe I'm incorrect about getting balance on both sides of the equation. Okay, so let's look at the downside scenario real quick, and then I'll cover the traps at the end of the day. It would actually make sense to me, given the recent environment that we've had, that we will actually give it a shot for half gap. Would make us a lot of sense, and I would actually expect responsive buyers. I'm not going to call that out. It's not a trade zone there per se, but if you're an aggressive trader, obviously you want to measure half gap. It's a good potential area for reversal, although it's not as high in odds as the zone itself. Obviously, what would be most ideal is the test of Friday's low and gap fill. I got to say, if we completely fail, okay, so if we open, are we trading 42.50? We open, we trust Friday's highs, we come in and we fail the white zone, right? And then at half gap, I would suspect we get a push back up. If we can't get back above the white zone at this point, I would expect to push lower into Friday's low. Here's the issue with Friday's low. It's already been tested 3 times. I'm going to show you all this. Okay. Slightly, it was, okay, so this was almost a test. I'm not going to count this. 1, 2, 3 times that we've been into this zone. This was the exact same zone we had Friday afternoon. The more zones, it works just like any other zone that gets repeatedly tested, right? The more times it's tested, the more likely it is to flush. This zone for me here, okay, and if I take a trade here, and I probably will, it needs to get out of here within 10, maybe 15 minutes to give me my 2-point scale. Otherwise, my concern is we come in, we get that little bounce, we may not even, right? And notice, if we're not getting 2-point bounces off these zones, right, heads up on that already before we ever get down here. But if we come in here and I don't have this scale within 2 minutes, I am probably have my finger on the trigger, and I'm probably moving my stop up, if I can do it, to break even. If I'm down after that 10 or 15 minute period of time, I'm probably just bailing on the trade at this point. That's too many tests of one area, and particularly after this gap up to get a complete failure, that would be a concern for me. So heads up on this zone. You know how I'll be handling it. I don't even have to call it out. I will take a trade here, and I will take a stop out. It's got to work pretty quickly for me to stick with it. I just assume miss the trade if it takes more than 10 or 15 minutes. In addition to the downside, right? So if we fail, and I want to focus on the downside, I don't think we're coming back down today, but if we do, if we fail here, okay, I will look to take a trade here. Sorry about that, guys. Let me fix that. How am I doing on time? Good. I will be looking to take a trade here and here. If this zone snaps, if the yellow zone snaps without any bounce, in other words, we just clear through it, right? The only place I'll be willing to take is not from the front, but the back of this zone, so that I can have a two-point stop. And yes, I realize that if we, I might adjust this zone up slightly so that we actually have 2 points here, but I'm pretty sure I have this zone correct. I'll go back and look at it before the open. I realize it's less than 2 points. So how do you handle a situation like this where you get two zones back to back? People get frustrated when we have zones that close together. Okay, so let me show you the way I'd handle it. Either, if I'm going to be concerned about taking a trade here, then taking a stop here and having to reload right here, I'm going to skip the green zone. So I'm going to handle that. And that way I'll be really stretched down here at Globex lows, which, by the way, I think if we break Friday's lows, Globex lows will get tested. That's just a gut feeling. But again, if this causes me problems, if you have an issue with taking a trade here because you're going to get stopped right here, just skip back to the next zone. Psychologically, what does that mean? Okay, so what's the other side of that frustration that traders have is they decide to go ahead and skip this zone. They don't take a trade. Oh, by the way, the other way I would skip this zone, right? If we come in, we break, and we snap right back off of it for 2 points and backside this test, I would not take the second test of this zone. I would fall back to this zone. Okay, so what's the other frustration of taking the trade in that particular order? What you've got to decide beforehand, before we ever get here, you should decide which one you're going to do. Why? Because you can say, well, I'm just going to sit back here, right? We come into this zone, responsive buyers come in, and we immediately get up to Friday's low, and then we trap above Friday's low, and we move back to the other end of the range, which is a potential, right? This might take overnight to do it, but it's certainly a potential. Or we move back up to the white zone, and then you're left that you're upset because you didn't take the trade here. That's called putting yourself in a no-win situation. So what you need to do is look at your P&L, and you should be able to look at prior examples of what the best way was to handle this over time. You should be keeping records of the charts and of your own personal trading, right? And you should be able to make a decision as to whether you can live with a stop in this zone and then still be able to take this zone, or if you need to fall back to the higher odds zone. The Globex low is the higher odds zone, there's no question. I usually am willing and able to take both zones because I know that over time it works out for me and the stop doesn't bother me. You should make a decision. In addition, right, what are the other safety valves that we have built in that help improve the odds in these areas? Well, a couple of things. First of all, measuring the 6-point rotation, number one, and secondly, looking for the 6-point or larger rotation, right? If you're a more conservative trader, you want to look towards a 10-point rotation. These are things that will help you make decisions and calm your mind. You just have to realize the wider the rotation you go for, the fewer trading opportunities will present themselves day by day. But the rule tends to be the larger the rotation, the more stretched the market is, right? The better odds you have of a snap back to the middle. The snap back to the middle, right, will obviously encompass that 2 points where you should be able to garner that trade. It's simply a decision of how active and how aggressive you want to be. Okay, the last part I want to go over here this morning, oh, and I want to move down here. There is, I need to look in here again. I want to go through the trade action back here really fast, if I can get far enough back. Okay. There's no zone here between 1820. There would normally be a zone right here like this. I removed it. Okay, normally the zone would be approximately 1821 to 1819, roughly. There is a zone here. I don't have it on my chart on purpose. The reason why is it got traded straight through last time we were here, which was quite a while back. right? I don't want to get, this is an area where we could easily, if selling pressure hits hard, we could easily just simply trade through. That's why there's not a zone there. If I miss it, I miss it. I can live with that, right? One of the things I work very hard on is to make sure I stay out of areas that that I can get swept through quickly. And the reason for that is because it pisses me off. And I don't get nearly as upset when I miss a trade as I do when I just take a zone and I get stopped out 2 minutes later. Really, really sucks. So there's not a zone here. If you'd like to add that zone, it's 1819 to 1821. My guess is that we would probably get a pause here, and these zones are also great areas where you consolidate right above it, and then they've wished right down. So long story short, I don't have a zone here on my charts because I'm not trading it. Y'all are more than welcome to if you'd like. I think that covers that pretty clearly. Let me move right back over here. Okay, the last piece that I have is the trap trades today. Where am I? Oh, there we are. Obviously, Friday's high and Globex high will be an area that I'm going to look for a potential trap trade, right? We trade up above, we reject, we get down back below. If we trap, right, I'm going to pull my eyes all the way down to the bottom of the range. Does that mean I think we're going to travel the 15 points or 14 points all the way back down to the low? No, I'll be scaling along the way. But I am cognizant, I'm cognizant that very often, when I say very often, I'd say better than 60 to 70% of the time, right? We are going to go a long ways towards that, okay? So how does that set me up with regards to the white zone? That means if I take the white zone the first time from above, and I'm cognizant that we've just trapped, right? I'm aware that if this white zone doesn't work relatively quickly and give me my 2 points on the way back down after breaking above Friday's high and Globex high and then back down below, that I am cognizant this thing needs to work fast, and it's possible that the zone flushes. Usually what those flushes look like is we come in, we trade back above. We could either tag here or here. And then, so usually that'll look is up, backside test, and then flush on the second time through, okay? That makes this trade a little bit more aggressive. I still take it. You need to decide for yourself, right? How do you decide for yourself? Can you simply live with the stop if you get stopped without freaking out? If you're short or you have trailers on from this point, right, you also have to make a decision, because the other scenario from here is we break above, we come back in for a test of the white zone. This assumes we don't get the test out of the gate. We're opening, right now we're at 44.50, so we may open in the green zone without a first test of the white zone, right? So we come into the white zone, and then we get back above Friday's high. That works as an inverted trap, possibly, and then for a push higher. Obviously, upside traps in the last months have been higher than the downside traps, but it doesn't bother me. I think they work just as effectively. You may need to have more patience on a downside trap. That's it. So, and then on the bottom side, right, we somehow get back down to Friday's lows, we break below, we snap back above, and we close back in, right? I would expect it to move at least to the white zone, possibly back to Globex highs eventually by the end of the day and or overnight / tomorrow, right? It's very possible we come in, trap, we could close here, right? And then by tomorrow morning, be back up here. Or inverse, right? My voice is going. Give me just a second, guys. It doesn't always occur on the... Hold on one second. I'm going to mute my mic here real quick. Okay, what I wanted to say was even if we trap from above, right? We come up, we test, we trap from above, and then we just end up closing in the middle of the range. Even overnight, right, I would still draw my eyes down to this level, potentially, and it could still be, we could simply hit this level in the AM or in the overnight session, but I still look in terms of where's this thing going to travel. I always look to the other end of the range so that I have a good idea of where we're probably going to go. What that keeps me from doing is it keeps me from stepping into zones or forcing zones in between or launching trailers in between here when I know we're very likely to get down to these lower levels. I want to see if I didn't cover anything else. Really, that's about it. I would keep an eye on the strength in NQ and or weakness. ES is opening near the high. NQ is still a good 5 points off of its high. Let's take a look at the NQ chart really quick. I don't have a lot of detail in there because mostly I'm looking at the trap trade in NQ to set up. So Globex high is right here. It looks like we're opening in 10 minutes. We're trading 35.45, so we could, 36.45, which puts us right at the bottom of this zone, right? Obviously, I want to see, and I want to look at both of them. If ES breaks and NQ doesn't break, that would be a warning sign to me. It could be wrong. NQ could still break above and go, but I'm going to be cautious on that. You'll notice I have no white zone on the NQ, and also the so the way it's going to work for me is obviously the ranges have been 30 and 60 points on NQ, so those are areas where I am looking to launch potential counter trades at that point. Okay. Also from Friday's high, right, we break above, we trap back below. I would expect to move either into Friday's low and or Globex low. Conversely, right, we come back down for minus 30. These are from the close, right? And then a rotation back up and traps above Globex low, and I would expect actually from there a possible trip back to the middle. And all of this needs to take place. Remember, I'm looking at it from up till 11 a.m. Beyond 11 a.m., I'm not particularly interested because I don't need it. I make the majority of my money day after day in that AM session. If I don't get a trade in that AM session, I don't care. The only point is for me is not to take a major drawdown, right? So 2 stops back to back end me for the day in ES. And that lets me control my downside, and it gives me potential to get back above my high water mark the following day. It doesn't drown me. What's the other issue that would stop me is really that's about it. It's the 2 stops back to back. Other than that, I'm just going to take my trades as they come. I don't particularly care if I have a down day, and I don't particularly care if I don't get a trade set up on any particular day. The last thing I want to leave is I was listening to so I race go-karts on occasion, and I went back and looked through some notes and listened to a racing coach that I had, and he was always pointing out to me, he's like, Simon, if you run it at 8/10, I was always trying to stay on the limit when I was racing, which usually meant that at some point in the race that I would go off track or hit something or hit someone else or crash, one of the three. And so he simply pointed out to me that I would be much faster if I went 7/10 or 8/10 through the race, and I saved my 10/10 for the very end of the race, or the very last lap of the race. For traders, the way that this applies, guys, is you don't have to capture every trade. If you'll turn down the dial, and the way traders make that 10/10 an issue is they go, I've got to make X amount of money in a week. They use the word have to, or I've got to, right? I have to capture every trade setup that I have. I have to trade every market that there is, right? The whole focus is on making money. If you'll switch that focus to the process, and the process being that I want to protect my capital. That's my most precious asset. And I also want to protect my mental capital. I guess they're equal, actually. Actually, the mental capital is probably more important, right? If you're in a market where emotionally you can't handle the speed or how slow it is, if it's causing you agitation, those are areas where you go, I'm just going to back off a bit here and wait till the market comes to me. It always does. A great example, a week ago, right, we were all complaining that, or 2 weeks ago, we were all complaining we couldn't get enough trades. Complaining is a strong word. I was complaining, but we weren't getting enough trades. It was slow. We couldn't get in and out. Well, all of a sudden this week, obviously the market exploded. If you traded well, you had a great week. Okay, But if you put yourself in a hole while the market was slow, you needed a great week just to get back to your highs. So take a deep breath, relax, let the market come to you. If you'll take a step back, you'll see the trades unfold and you'll understand what the price action is communicating to you in a much easier format, and it won't be as much pressure on you. If you get one trade and you have not been winning, right? You get one trade in a day and it's a perfect setup and it gives you 2 points. There's nothing wrong with turning off the monitor and let your mind get used to winning. And so that would be what I took from listening to. It was an old racing tape of mine, and he was simply explaining where I was making my errors, and I just simply couldn't let off the gas enough to let myself win races. So at any rate, that's what I got. I certainly hope that was helpful, guys. It's about 5 minutes till. I'm going to go do a couple of quick breathing exercises and get myself in order. Now that I see where we're opening at this 1843, going back to NQ, ES. Going back to ES, we're opening at this 1843. I'll still probably use the back of the white zone. I will not call it unless I get a 6-point rotation, a clean 6-point rotation first time through. If I take it, it'll simply be because I'm an aggressive trader. Also, don't forget to mark off 1844. We closed at, what was it, 1832, I think? Get this out of my way. We closed at 1833, so we open up at 1844. It's 11 points, 5.5 back is half gap, right? And I'll continue, by the way, just in case anyone's interested, right? The further up we go, if we open here and we go to 1846, I'll take the half gap as 1846 to 1832 or 1833. That would be 13 points. So 6.5 back would be half gap is what I'd be looking for on the half gap again. So remember, open gaps have been failing to the downside. So I won't be overly aggressive in looking for a long. If I miss it, I miss it. That's life. And I'll be watching NQ. If ES busts new highs and NQ doesn't, it's a warning sign for me. Anyways, have a great day, guys. I hope that helped out. And do your best. Talk to you later.